total income of 6,098 crores is what they've clocked, and the stock is down about 1.5%. Dabur came out with its numbers as well. The management joins us. Profit of 173 odd crores is what they've clocked in, which is an increase of 12% in their profitability. Let's talk about the numbers in greater detail with the management of Dabur, Sunil Duggal, the CEO of Dabur India numbers. Let's start off first, Mr. Duggal, with the volume growth on a consolidated basis. How have they been for quarter 3?
So on a consolidated basis, the volume growth has been around 11%, and for the India business around 7.5%.
Let's talk about the top line. That has seen a good growth, not comparison to what the PAT has grown, but that's due to the consolidation of the international business. Could you throw some more light on the same?
See, the total business consolidated basis has grown by 35%, out of which around 14.5% is on account of the acquisition. So the organic growth for the global business has been around 20-21%, out of which around 16% has come out of India, and the balance has come out of businesses outside India.
So you hiked prices in the quarter gone by. Still, gross margins both Q-on-Q and Y-on-Y are down. Could you sort of tell us why?
So sequentially, the margins have been fairly constant. There's been no erosion as such. On a Y-on-Y basis, of course, there has been erosion because last year we had a EBITDA in excess of 20%, which was really at an all-time high. This year, it's down by around 3%. That's entirely on account of inflation. The price increases which we have taken have more or less neutralized the increase in cost, but on a ratio basis, it has not been able to fully neutralize the impact. So our EBITDA margins and our gross margins have shrunk by around 300 basis points. Having said that, we believe that the inflation cycle is now ebbing a little bit, and we would look forward to better margins emerging from the business in the coming quarters.
Would you want to put out a guidance for the Jan to March period, margin-wise, sir?
No, I don't see any further damage happening to margins unless something totally unforeseen happens. The reason for that is that inflation is coming down, and that's pretty visible. Secondly, the high base effect, which really will come into play from the first quarter of next financial year, would also help us in terms of maintaining the margin profile. So I think the margin situation, as I mentioned earlier, would be far more benign next fiscal than it has been this one. This has been a particularly rough year for us.
Are you looking at any price hikes, for controlling the margins going forward?
I think the opportunities for price increases as we speak are fairly limited because of the competitive environment, A, and B, because the inflation tapering off a little bit. So I would not think that price increases, they would be significant in terms of driving better margins. It would be lower material costs which would drive that the margin profile going forward.
All right, Mr. Duggal, before we wrap up, a quick outlook in terms of the FY12 guidance, plans in terms of growth and bottom line, top line targets?
Well, we don't give any outlooks as such, but we would look at growth on a consolidated basis in the high teens as far as the revenue side is concerned. The margin front are not as clear because a lot will depend upon inflation cycle and the competitive activity, etc. I think what we are very committed to is to drive strong revenue growth by investing substantial amounts in advertising and promotion. And we believe that would ultimately provide the best route to margin expansion rather than just by cutting cost. So I think the margin profile for the business would certainly look better than what it did in 11-12. Would we be able to scale the peaks of 2009-10? Well, I wouldn't be so sure about that, but we'll certainly have a go.
All right, management of Dabur then, Sunil Duggal highlighting quarter 3 and expectations for the entire financial year, expecting the next quarter to be a little better off, facing pressures in terms of raw material costs. Stocks high by about 2%. Back to the markets then, Manish also joins into the discussion. Manish, thanks very much for taking out the time and speaking with us. Let's start off with your stock calls firstly, and before that, a quick call on FMCG.
Okay, in case of FMCG, the stock